What's going on, guys, and welcome to the first video in this series. Now, this one will pretty much be focusing on, before we dive into Forex, what do we need to look for? What do we need to understand about the markets? And what is this Forex right for us? Okay, so there are two main components in trading. Now, obviously, the first component is us, you and me, the trader. Right? So obviously, we're pretty much one of the main components, and the other component that we are going to look at will be the broker. Right? So we've got the broker and the trader. Now, there are a couple of things we need to look for in both of these, really. We need to make sure that the broker is right for us and the broker is a good broker. What do we look for in brokers? And also the trader. Are we right for trading, right? You and me. You and me. Is trading right for us? So there are a couple of components to this. So let's have a look at the broker first. Right, there are a couple of things we need to look for in a broker before we start trading. Now, the first one we're going to look for is, are they regulated, right? So a lot of people don't like regulations for some other reason. They say that, oh, they prevent me from, the regulators prevent us from making money, or they prevent us from becoming millionaires. It's not true. The regulator is out there to protect your capital, guys. They're to protect the people from potential fraudulent companies. So that's why here at BlackBull Markets, we are well regulated. We're regulated, especially because we're here in New Zealand. It's a very strict country for financial services as well. So we're regulated by the FMA and also regulated at the Seychelles as well. So we got a couple of regulations here, and what we do as well to keep client funds safe, we have it in a segregated bank account. Now, essentially what that means is when the client's funds are in a segregated bank account, it means the broker can essentially not touch those funds. So if anything happens to the broker, or they go under, client funds are secure. Now, if they're regulated as well, also here in New Zealand, BlackBull Market is registered under the FSPR. What that means is, if something was to happen with the company, right, auditor would come in and start, going to that segregated bank account, and they would start handing out client funds back to the traders, all right? So that's kind of the first thing we want to look for. The other thing we want to look for, so actually, let's chart them down. So we want to look for, let's get a black pen out. We want to look for safety. Right, is the broker safe? Right, that's the first thing we'll be looking for. Another way you can look at it as well is how good a broker is. If you go to places like Forex, PSAMI, the FPA, you can always look at the reviews. Right, so a broker will always have reviews on there, and they're very non-biased review page as well. So definitely go have a check out of them and have a look at BlackBull Markets on there. I'm sure you'll like the reviews. All right, now let's have a look at the other thing we want to see inside of a broker, and that's called we'll call it a relationship. Bit of a long word, relationship, right? And what that means is, do you have someone to talk to help you? Not a psychologist, guys, but if you have any issues with, let's say, something's gone wrong with your account, or on the rarer case that something's gone wrong with the account or anything like that, do you have an assigned account manager to you? So here at BlackBull Markets, you have an assigned account manager to you that helps you out with your trading, or with any sort of general issues you might have. And you also have that 24/5 live chat if there's anything. If your account manager, obviously they do need to sleep as well if they're not available at that stage, right? So make sure you've got a good client relationship. And the thing that BlackBull Markets prides themselves about is making sure that everything is personal and everything is very tight with the clients as well. So we make sure that we have a good relationship with our clients. So that's the first thing you want to look for: relationship, communication, and openness. All right, so that's what you want to see from a broker as well. Now, the other thing is liquidity, right? We've got a couple of things we need to look at liquidity. There are two different sort of liquidity sort of brokers that we look at, and the first, they're going to be your A book and your B book broker, right? So we'll call it, right? So there are two different structures. Now, we have made videos on this. We'll go through it as we dive deeper into the series, what A book and B book is and how liquidity works and everything. But essentially, an A book broker takes your trade straight through the ECN, straight to the liquidity providers, and there is no potential for conflict of interest, right? So what that means is you're trading against everyone else who's out there, or everyone else who gets piled into the liquidity pool, and the broker is not taking the other side of your trade, right? Now, there is some downsides to being on an A-book broker, right? But there are also downsides being on a B-book broker, and the risks, I believe, on a B-book broker is a little bit larger as well, and potential for more risk. So BlackBull Markets is an A-book broker, or another thing you want to see is an ECN, same thing, ECN broker or A-book broker, right? Or non-market maker is another one as well, right? So BlackBull Markets is sitting under A book. So there's no conflict of interest. All they do is take you through to the liquidity pool, don't interfere with your trade at all. Now, coming to a B-book broker, right? A B-book broker is the liquidity provider, right? So they don't use these big banks, right? But they use their own little, they've got a little kitty with them that they use, and the traders pretty much trade in that kitty. So what essentially can happen here is, obviously, if you lose money, the broker makes money, and vice versa. So you guys can kind of see where the conflict of interest comes in. But we also do need to keep in mind that not all brokers do this that are under a book, because obviously the majority of traders, we do know about this statistic, the majority of traders do lose money. We actually made a video on that, if you guys want to go check that out. So we made a video on sort of, you know, why do majority of traders lose. But going back to the point is, obviously majority of traders do lose, right? So if there's one guy who make one or two guys, and let's say 100 people make money, they're not going to be really too fussed about it. Okay, but the issue is, like I said, the broker takes the other trade, takes the trade against you, and, you know, like I said, you lose money, they make money. So just be careful when you do have a B-book broker. A couple of things you want to look for is, do they do market manipulation, right, under this B-book broker? Do they do market manipulation? The easiest way to check that is compare your feed to an ECN broker. So compare it maybe to something like BlackBull's feed, or even if you want to use TradingView. Do you see any major differences in sort of the movement in the market? If there are major differences like big wicks and stuff, then yes, you might want to start looking into that issue. The good thing about having a B-book broker is you get instant access to the market, so there should be no slippage. Again, if there's slippage with a B-book broker, start looking into it, okay? But there should be no slippage. Like trading on a demo account, because the broker instantly takes that trade against you, you should get straight away into the market. And that's one of the downsides to having an A-book broker, right? You are exposed to the real market, which is a benefit, but it can also be a bit of a negative as well. The one thing how we can avoid this is obviously trading during times when there's high liquidity in the market, but we'll look more into that as we dive into the video, right? So there is a potential for slippage when you trade with an ECN broker, right? But that's one of the only few risks that you really do have with the A-book broker, because you are exposed to that live environment, the live feed, compared to a B-book broker where they take that trade against you, right? Okay, so now let's have a look at you and me, the trader. Are we right for trading? There are a couple of things we need to understand what is right for us, right? Let's have a first one. What is our goal in trading? What do we want to get out of trading? We need to understand there are a couple of things we want out of trading, right? Do we want to be rich? Do we want to make money? Do we want to be the next Warren Buffett millionaire? Yes, those are good goals to have, but they could cause some implications, right? The reason for having, if your goal is being very rich, there could be a bit of an issue, right? The reason being is because you're focusing on the wrong thing. So we need to get our focus on being free, right? The reason for what I mean by being free is, when you trade for yourself, it's your own business, right? You decide your hours. Obviously, it depends on the market movements. You decide your hours, guys, and you're your own boss. So that's really what it is, right? If you focus on the money, you're focusing on the wrong thing. If you look at it for this example, if you always focus on hitting a home run, right? If you always think about hitting the home run, it'll be extremely hard to get it. But if you focus on hitting the ball right, getting the right hit, the right swing, the right peak on the bat, the home run will come. It's the same with trading. So rather than focusing on these big, it's always, like I said, it's good to have goals, right? But don't focus only on that. Don't close your eyes to everything else and focus, I need to make a big, because then you'll start looking at, I need to make big trades, I need to make a lot of money real quick because I want to be a millionaire overnight. It doesn't really happen that way, okay? So that's pretty much the main thing when you look at the trading. And then the other thing is, right, the other thing when you look at is money, right? How much money can, we'll call this, instead of calling this that, let's call it, we'll call it investment, or yeah, investment, right? So we'll call it investment. How much this includes time and money you're willing to invest in this. Now, the one thing about trading is, it is a business, guys. It's like starting a business. If you're going to go out there trying to start a business with $50, it's going to be extremely difficult. Now, in saying that, no, I don't know. We do understand that not everyone has got millions or $10,000 that they're just willing to throw at the market, and that's perfectly fine. You can always start somewhere, but you need to be able to take this seriously, right? Now, if you do have a lot of money, more money in your account, yes, that journey will be shortened a little bit, but I'm not saying, this is where it gets a little bit complicated, right? If someone who just puts in $100,000, for example, into account, it does not make them a good trader. There's still skill, discipline required to be a good trader. So just because you've got a lot of money doesn't mean you'll necessarily be a good trader, all right? So what I'm trying to say is invest a bit of time and effort into it. Take it seriously, guys. That's the main thing. Take this seriously. It is a business. You're not going to become a millionaire overnight. It does take a little bit of time, all right? That kind of brings us down to sort of the curve of trading, right? So this is your money, your success, and that's obviously is your time, similar to the charts. Right now, a lot of people think when you trade, that's what you see, okay? People think this is your curve of success in trading, and this is wrong. It's, I mean, if this happens, you are an absolute prodigy in trading. So most of the time, majority of the time, that doesn't happen. You're going to look something more like this, right? And you'll probably blow a couple of accounts along the way as well, which is just part of the game. Okay, that's more what it's going to look like. Okay, so let's try and break this down a little bit. What we see here, right? This is the initial burst, the hopefulness, the beginner's luck kind of thing, and then we have either blowing an account or going all the way down, right? This is when let's say this is your first account that you're starting to take seriously, because we do go through some accounts we blow because it's just how our psychology works, unfortunately, right? So then we see the big dip, we go all the way down, and we think, no, okay, I cannot lose. I cannot do this, right? We can't keep going like this because I need to take this seriously, and that's when you start to kick in. You quickly grow the account to break even, right? Now you're back at this break even zone. Now the thing about this is a big psychological barrier for you to go through, to go past that initial funding mark, right? We're going to struggle to go past it. You might go past it a little bit, yes. You see, yes, finally I finally got it, I got it again, and you see a pullback back to the area and think, oh, I'm back at the zone again, what am I going to do now? And then you start to say, okay, you discipline yourself, you say, okay, I've done this, I've broken past this before, let's do this again, let's figure this out. So you slowly start to get the hang of it, and then you finally take off. So it's a bit like the charts, guys. If you look at the charts, we'll look more into the psychology of everything. We actually did do a video on psychology, kind of on the Elliott Wave side. So if you guys have not yet checked out the Elliott Wave series, definitely go check it out. The Elliott Wave playlist, we talked about psychology, but I'll quickly go through this. It's very similar to trading, right? We see this in trading. We see the initial hopefulness, right? We see the doubt, we see the troubles, we see the problems of everything kicking in. Then we see, okay, well, we kind of maybe have the hang of this. Is kind of the trend's starting to come. There is maybe a bit of hopefulness in the market. Yes, let's go. Then you break past. People go, okay, well, it's broken past. Let's see what happens. Then obviously it comes to push down, comes to retest the area, grab a bit of, we can call it maybe hopefulness back down here, because okay, I've done this before, I've done this again, and then the hopefulness kicks in. The power kicks in, then your understanding in the market kicks in, and then you're good to go. All right, so that's kind of the journey of trading, guys. This is the basics. This is what we need to know if we want to be a trader. So let's dive into the next videos, guys. If you have not yet done it, make sure to click the like and subscribe button, and click that bell icon for when we release new videos in the series or any videos in general, guys. Hope you enjoyed it. Stay tuned. Trade safe.